It's been a while since we've seen any kind of red in the stock market, although in 2022, that was pretty much the color we've seen every day, and we have seen exactly the opposite in 2023, and this is pretty normal. This is how, such things normally play out, and this is mainly what happened on Thursday. And if you look at the 10-year pretty much made a massive breakout, and this is one of the reasons why stocks went down. Whenever yields go up, stocks tend to come down. And if you looked at a lot of the kind of growth stocks, unprofitable companies, around SoFi and around, Palantir, although some of them make profits, but mainly the growth stocks, they were down 5, 6, 7%. Affirm was down 13 or 14% in just one day. C3.ai, the darling of AIs, was down like 11 or 12%. Pretty crazy all in one day whenever yields went up. And the main reason yields went up was because of the jobs report. And the ADP jobs report put up numbers of 497,000 jobs in June, more than double the expectations. That was a huge surprise for pretty much everyone. Now, the main reason why yields are going up, because if we have, more kind of jobs being created, which would mean that the labor market is going to be tight. And the Fed has two mandates, which is, full employment and price stability. But if you already have full employment, you have a strong labor market, then you have to focus on the price stability, and he has to somewhat focus on getting the labor market to be a little bit less hot, because if you have higher and higher wage increases, it's really going to cause a lot of pain on in terms of inflation. But this was actually a big surprise, especially after what Powell said in his latest meeting. He said he's gonna hike 2 more times, and I personally said that I don't believe him, and the market went up on this news because the market actually still didn't believe him. And if you look at all pretty much the stocks that made the massive moves, like Nvidia, even Apple, most of it was not due to some kind of a massive improvement in fundamentals or massive profitability growth, although yes, some of them put up good numbers, but it was largely a multiple expansion story. If you look at the Apple's price to earnings multiple, and this is forward earnings, not even trailing earnings, forward earnings for Apple, they got a massive expansion. It bottomed around 20 times forward earnings in December of 2022, and now it's sitting at 30 times earnings, much higher than its historical average over the past 5 years. You can see the most extreme one, which is Nvidia. Look at this multiple expansion in terms of price to sales. It was trading around 11 or around 9 times sales in October of 2022, and it went from 9 times to 40 times. So all these companies went up massively, not because the fundamentals are amazing. The fundamentals are not the best at all, but the main reason for that was a multiple expansion, and the market did not believe Jerome Powell that he's gonna hike 2 more times. They did not believe him he's gonna hold rates higher for longer. The market was pricing in rate cuts in 2023 and some in 2024. And if this actually doesn't play out, if Powell doesn't cut rates in 2023 and he holds rates higher for longer, he does hike 2 more times, and he holds them after 2024, then the market's gonna have to reset the valuation of those multiple expansions that it gave to a lot of those stocks like Nvidia, like C3.ai, a lot of the hype stocks that pretty much don't have any kind of good fundamentals but only got a multiple expansion. All of this could potentially be reset, and then we could potentially have a pretty massive reversal in a lot of those stocks, which is, pretty crazy. And this to me kind of reminds me of what happened in the dot-com bubble. Now, I'm not saying this is exactly the kind of dot-com bubble, but we had such things happen many times before. We had them in the dot-com bubble. We even had them in 2021. Every time there's some kind of story that something is the future and that the TAM is unlimited, and therefore the multiples get very, very high because people FOMO, they want to get exposure to this specific industry, and then multiples get bid up, and then people suddenly, after rates go up, they look beneath the surface, they see there's not such good profitability in all these AI kind of stocks, and then the reversal starts happening, and it gets very ugly whenever people wake up to reality, especially with these companies like Nvidia. I'm not saying Nvidia is not an amazing company, but in my opinion it's priced to perfection, and we have seen how this has played out before. And this is what happened in the 2000 pretty much dot-com bubble. Now, if you bought Cisco in the 2000 highs on the dot-com bubble, you never got back to break even till today. You're still down on your position after all this time. Microsoft, it took 15 years and 7 months to get back to break even. Intel, 19 years and 9 months. IBM, 9 years and 7 months. Oracle, 14 years. Qualcomm, it took 13 years and 8 months just to get back to, break even from those highs. And the main reason people bought at those highs because they were saying that the internet is the future. And they were right. The internet was the future. It did change the world. It changed everything. But if you pay too much for whatever you're thinking that you're buying, you're going to lose money. Even though you have the best kind of growth potential in the world, you have the best kind of technologies, the AI or whatever it is with NVIDIA or with C3.ai, a lot of those stocks, even if you're right that AI is the future and all those stuff, if you overpay for those companies, you can still end up with a massive, massive loss, even though it doesn't seem obvious in the moment. For example, if you look at, something like NVIDIA, it feels like NVIDIA will never, ever go down. This is kind of how it normally feels whenever it's close for such companies to eventually come down. This is how it feels, that it's just such moves, they don't come when everyone is expecting it. Now, pretty much no one expects NVIDIA to go down. People say it's going to keep going up, every single day. But this is normally when we could potentially be close to some kind of a reversal with these kind of stocks, because they don't come when everyone is expecting them. They come when no one is actually expecting them, in my opinion. But this is not, again, the first time it happened. And I always do these videos because I believe such things that happen in the market actually create, a lot of opportunities that, investors can actually take advantage of. And this is something that I'm doing to take advantage of this in my portfolio. I don't do these videos to try to tell people to, get out of the market or, go all in SQQQ or, anything like that. But this is what happened in the 2000 dot-com bubble. This is what happened even in 2021. I talked about this in my other videos. Every time people get excited about something, every time they bid up stocks like that because of some kind of something they're excited about, eventually in the future they're not going to be excited about it anymore, or maybe something else will happen. But now, because they are excited about this specific money, this kind of asset gets bid up and other kind of assets go down because money goes around. It goes from certain assets to another. The market is always rotating. So whenever you had the Nasdaq making a new all-time high in March of 2000, you had Berkshire Hathaway, Warren Buffett's company, Berkshire. It made a new all-time low pretty much. It made a new 52-week low, actually, not an all-time low, a new 52-week low in March of 2000. And the same time where the Nasdaq made the new all-time high. And it's the same thing in 2021. People were bidding up the EV stocks. You had the oil stocks that were down so much. And yet in 2022, you had stocks like Occidental that went up more than 120% in just 1 year. So there's always these kind of opportunities. Whenever people are bidding up a certain asset, they're gonna leave other assets behind, and this is the asset you should be buying. And if you're like me and you want to get exposure to AI or some kind of a lot of the Nasdaq companies, I would personally wait until there's more fear around those certain assets. And you might believe that this will pretty much never happen. But I believe it will happen. I just don't know when, and I'm not, kind of dying to get exposure to AI or anything like that. But I'm for sure not going to FOMO and overpay just because I want to have some kind of AI exposure or whatever. I will wait for the right time. Whenever the sentiment changes, these stocks that I've been buying, they're going to eventually recover, and they have been actually recovering a lot lately. A lot of them have been going up a lot. But then when that happens, the Nasdaq is going to reverse, and this is when you could start getting exposure to these kind of industries whenever the sentiment changes. But now we have extreme greed around these industries, which is why I would be very careful with the kind of companies I'm buying if I want to buy something in the Nasdaq or something around AI in general. So this was my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another one.